Welcome to the Burrow. It's your host, Lala Bunny, head trader at Bimbo Trading Academy. And the topic of today's video is Liberation Day 2025, global tariffs, and the subsequent crash of the US stock market. Let's get into it. Okay. So, Donald Trump, who is the current president of the United States, made a speech on Tuesday, April 2nd, 2025. And he announced Executive Order 14257, titled Regulating Imports with a Reciprocal Tariff to Rectify Trade Practices that Contribute to Large and Persistent Annual United States Goods Trade Deficits. The order outlines extensive global tariff policies, which the president described as the United States Declaration of Economic Independence. The following result was a stock market crash. Let's define first what a crash is. A stock market crash is a sudden and dramatic decline in stock prices across a major segment of a stock market, often driven by panic selling and underlying economic factors, resulting in a significant loss of paper wealth. Definition: a stock market crash is a rapid and often unanticipated drop in stock prices, typically defined as a 20% or more decline from a recent high. Causes: number one, economic factors. Major economic events, crises, or the collapse of a long-term speculative bubble can trigger crashes. Number two, investor panic. A major contributor to a crash is reactionary public panic, which can lead to widespread selling and further depress prices. Number three, speculative bubbles. Crashes often follow periods of excessive speculation and the formation of economic bubbles. Now, here are some examples historically of stock market crashes, specifically in the US market. One, the Wall Street crash of 1929, a significant event that is widely regarded as signaling the downward economic slide that initiated the Great Depression. Number two, Black Monday, 1987, a major crash in the stock market that saw the Dow Jones Industrial Average drop more than 22% in a single day. Number three, the dot-com bubble burst of 2000. This was a crash triggered by the collapse of the housing. Oh, no, I skipped one. This was a crash that occurred after a period of rapid growth and speculation in internet-related companies. Number four, the financial crisis of 2007 to 2008. Now, this was a crash triggered by the collapse of the housing market and the financial institutions that held mortgages. And number five was the 2020 crash. And we all know what that was caused by. If you don't know what it's caused by, look it up, but I'm not going to discuss that topic at this time. Now, what are the consequences of a crash? Now, look, crash sounds so extreme, but historically, the market has been able to recover. So, a downturn, there's something called bull market, bear market. So a downturn is when it is a bear market and the market does go down, but they define it as a crash once it hits a certain threshold. Here are the consequences. One, a loss of wealth. A stock market crash can lead to significant losses for investors. Number two, economic downturn. Crashes can trigger or worsen economic downturns, leading to job losses, business closures, and other economic difficulties. And number three, reduced confidence. Crashes can erode investor confidence in the stock market and financial markets in general. Now, on Wikipedia, there actually is an entry for the 2025 stock market crash. And this is what they're saying. The 2025 stock market crash is an ongoing means we're still in it. We're still in the middle of it. Stock market crash in the United States, which began on April 2nd, 2025, as a result of tariffs and trade wars initiated by President Donald Trump. The crash is the largest decline in the U.S. stock market since the 2020 stock market crash, so 5 years ago. All right. And there is also an increased forecast of recession. Now, if you've been following economics, some people believe we were already in a recession, even a depression. Some people were calling it a silent depression. Um, so there are things you can measure in an economy that determine whether we are in a recession or a depression. And there's also an argument to be made that some parts of the so since 2020, that some parts of the economy recovered and some did not. We had a K-shaped recovery, which created a bifurcation in our society between basically the have and have nots, which we've always had, but it got more exaggerated. So you could argue we haven't even fully recovered from the 2020 recession. And now here comes another one, perhaps. So people are very worried. As they say, like, blood is in the streets. People's portfolios are bleeding. It is a frightening time because people are seeing their retirement money that they worked really, really hard for and saved, that it's getting wiped out. But it's not gone until you sell. So if it dips and you hold and it comes back up, you might be okay. I'm going to cut this video off and keep going in a part 2. And I'm going to kind of talk about my investment strategy and how I'm going to keep moving forward, because my faith is not completely lost in the US stock market as a vehicle for the creation of wealth. All right, so I guess I made this video to tell you to relax, to weather the storm, to not freak out. And we will get through this together. All right, happy trading. Bye.